So guys, we are back with another round of portfolio reviews, and I am so excited for this one. We've got some really cool portfolios on deck today, and we are going to go under the hood to take a look at each one. We'll check out all the holdings, and I'll give you my honest thoughts on what I like about these portfolios, as well as what I think could be improved. And as we're going through these guys, please keep in mind that I am by no means a professional. These are just my very amateur opinions, so definitely take them with a grain of salt. And remember that at the end of the day, this is all just for fun. Now, real quick before we get into it, if you want to have your portfolio reviewed by me in one of these videos, just fill out the form I have linked in the description. And also, as we're going through these, leave me a comment below and let me know your thoughts on these portfolios as well. I'd be really curious to get your feedback. Now, getting into our first portfolio of the day, this one belongs to my friend Mohammed, who's been investing for somewhere between 1 and 5 years. And Mohammed has a relatively short time horizon, actually. He's open to live off dividends sometime in the next 5 to 10 years. And every single month, he's really packing a punch with those contributions. He's hitting it hard, investing $3,000 per month. Now, in his notes here, Mohammed says, I am 38 years old, aiming to retire in India by 45. So he's got a 7-year time horizon. That's pretty quick. With a family of 3, extended family of 6. I've been getting ESOPs, which is an employee stock ownership plan, since 2018, and buy company stock at a discount, which I usually sell to invest in companies I believe in. Since 2023, I've been actively investing outside my company stock, focusing only on halal companies, which means no alcohol, gambling, interest-based businesses, or insurance, and those with very low debt. Now, that all sounds pretty good, and I'll tell you guys what, Mohammed's portfolio here is pretty insane in a good way. Looking at an overview of the portfolio, Mohammed has $464,000 invested at 38 years old. That is insane. That's incredible, truly impressive. And with that, he is up 79% in this portfolio, so he's seeing a $210,000 profit. It's just unbelievable, guys. And looking at the dividend stats, pretty low starting yield, 0.8%, but the dividend growth rate is awesome, 10.1%. So obviously some very solid numbers there across the board, and as we'll see in just a moment, the holdings in this portfolio are pretty solid as well. Real quick though, I wanted to mention that Mohammed has shared his portfolio with us using Snowball Analytics, which is actually the sponsor of today's video. This is a really cool portfolio tracker. It's actually hands down my favorite portfolio tracker. I think you guys would like it a lot, and I want to tell you a little more about it. One of the most essential tools for any investor is a solid portfolio tracker, and Snowball Analytics is like the Swiss Army knife of portfolio trackers. I've been using this platform pretty religiously to track my own portfolio for a while now, and I can't tell you how impressed I am with how much insight it provides into my portfolio. As you can see, the layout is very clean and intuitive, and the platform overall is pretty easy to navigate. Plus, it's packed with more charts and graphs than you can count, which speaks to just how much data you get, not only for your portfolio, but also at the individual stock level as well. I mean, pretty much anything you want to know about a company's financials or dividend history can be found here within the platform. Now, in my opinion, what really sets Snowball Analytics apart are the features it has specifically designed for dividend investors. I'm actually convinced this platform was made for us, and here are some of my favorite features. First off, Snowball tells you your total returns by default throughout the platform, which may sound like a small thing, but it's crucial for dividend investors because it doesn't neglect the dividend income we receive when calculating returns. Most other portfolio trackers will only show your share price returns, which is really only half the equation, so it's refreshing to see dividends factored into these calculations. Additionally, Snowball has a pretty in-depth event calendar that keeps you updated with upcoming news, dividend payments, and any other important stuff going on. And they even have a dedicated dividend calendar so you can see who's paying you each month, when they're paying, and how much they're paying. Beyond these tools, Snowball also has a community section where you can check out other users' public portfolios to see what others are investing in, which is always a fun thing to look at. Plus, they have stats for stocks and ETFs that show what's trending and what's popular among other investors. This makes Snowball not just a killer portfolio tracker, but also a great place for dividend investors to get new investing ideas. So overall, if you're looking for a great portfolio tracker, which once again is something that every investor needs, then I highly recommend you check out Snowball Analytics, which you can actually do for free. All you need to do is click the link in the description of the video or in the pinned comment, or just scan this QR code right here to get a free 14-day trial. And if you like it, you can save 10% on your subscription when you use code Ryne Williams. I really love using Snowball Analytics, guys, and I know you will too, so definitely check out that 14-day trial, and don't forget to use code Ryne Williams to save 10% on your subscription. Anyway, getting back to it, looking a bit deeper into Mohammed's portfolio, in in total, he has 26 different holdings. None of them are ETFs. They're all individual companies, and he's pretty heavily weighted in the tech sector. Looks like there are 11 different tech stocks, and it makes up 61% of the portfolio. So that's pretty interesting. There is good reason for this, though. If we scroll down, taking a look at all of the holdings here, we'll categorize this by largest weighting to smallest. We can see a lot of very recognizable companies here. NVIDIA is the top position, making up 24% of the portfolio, and look at that gain. Just with this one position, he's up over $140,000, up 43%. But like I said, the rest of these positions are pretty nice as well. All big blue chip companies: Merck, AMD, Schlumberger. We've got Salesforce, Adobe. Just keep scrolling down here. You guys will recognize all of these companies, I'm sure. Now, first and foremost, whatever you're doing in this portfolio, Mohammed, is definitely working. The gain that you're seeing is just incredible. And like I said, I like most of these companies. I think for the most part, they're pretty solid. And I like the fact that you're trying to focus on companies with low debt. This is something that I try to do in my portfolio as well. One of my favorite things to see is a company with a low net debt or even a negative net debt. It just adds a layer of resilience to the business, I think, and it's just one less thing you have to worry about. With that said, though, there does appear to be a couple businesses in here that are losing money, like Iris Energy right here. If we take a look at the company over on Snapstock, we can see it has a very, very low snap score right here. Tons of red flags, 11 different red flags. And if we scroll down, just looking at the growth metrics, like I said, this one's losing money. It's not generating any positive net income. It's not generating any free cash flow either. And speaking personally, just because of the style of investing that I choose to partake in, you definitely wouldn't catch me buying a stock that's losing money. It just doesn't make sense to me. With that, another stock in your portfolio that is also losing money is CoreWeave right here. Once again, we see quite a few red flags and even lower snap score, only 1.5. And this might just be the lowest snap score that I've ever seen. Pretty dang low. But if we scroll down, once again, looking at the growth, negative earnings per share, which means there's no net income coming in. They're losing money there, and they are not generating any free cash flow as well. They are burning cash to a big degree. But fortunately for you, these are both such small positions in your portfolio. Combining the two, it's only 0.66% of your portfolio. So even if they went to zero, it's not going to be the end of the world for you. You'll definitely survive. And that aside, I think the only other thing that maybe you'd want to keep an eye on, and not necessarily something you should even change, but just something to be aware of, is the fact that technology makes up 61% of your portfolio. That's a pretty hefty allocation. And a lot of that is just because you've done so well with NVIDIA here. So it makes sense that this one position and tech in general would become overweight in your portfolio. But if the market were to change directions, which I can't help but think at some point it's got to, and if, NVIDIA were to see a big pullback in share price, you would definitely notice that in your portfolio, and it would definitely not feel good. Otherwise, Mohammed, you are absolutely crushing it, my friend. I hope that when I'm your age, which is only 6 years from now, I hope when I'm 38, I can have a portfolio somewhere close to yours. That would be really cool. But nonetheless, you're doing great. So keep up the good work. And thank you so much for letting me review your portfolio. Now, portfolio number 2, guys, belongs to my friend Xavier, who's pretty new to this investing stuff. He hasn't even been investing for a full year yet. He has a very long time horizon. He's not hoping to live off dividends for another 2 to 3 decades. So we've got a lot of great compounding years ahead of him, and he's hitting his contributions pretty hard, throwing in about $1,000 per month, which I think is very impressive considering, as we can see in the notes here, Xavier is 22 years old, and he says he's currently taking a gap year before starting medical school. He says, I started investing in my Robinhood portfolio early this year. I also invested heavily in crypto when I was 18. I currently own a 0.077 Bitcoin with an average cost of $44,000. So seeing a nice little gain there. Should I sell my crypto though to focus on my stock portfolio? That is a great question, Xavier, and to be honest with you, I really don't have a good answer for that. I'm probably biased because I don't own any crypto, and I honestly don't have any interest in owning any crypto. I'm probably not the best person to ask about this, but at the end of the day, I think really you're the only one who can make the decision as to whether or not it would be best to sell your crypto or hold on to it, or how to divvy up your contributions between crypto and stocks. You have to do what you think is best. It's your portfolio, and no one can tell you what to do. But with that said, looking at Xavier's portfolio, which he also shared with us using Snowball Analytics, he's sitting at just over $13,000. So that's really awesome considering you're only 22 years old. Great job there, Xavier. And he's seeing a nice gain. He's up 17%. I think the dividend stats are looking pretty well balanced too. 1.8% yield with an 8% dividend growth rate. If you can maintain this over the next 20 to 30 years, you'll be sitting pretty in the dividend department. But anyway, scrolling down, looking at the diversification in this portfolio, in total, there are 9 different holdings. 83% of the portfolio is in individual companies. There is 1 ETF in here. And also, if we scroll down, there's a little bit of crypto in here as well, making up 2.3% of the portfolio. And scrolling down, taking a look at all of the holdings here, it looks like the one crypto that he has isn't even the Bitcoin that he was talking about. Looks like there's a little bit of Ethereum here. And looking at the rest of the holdings overall, I've got to say this is a great selection from top to bottom. At least in my opinion, there isn't a bad stock or ETF out of the bunch. SCHD is the lone ETF, but overall, taking all of this into consideration, it doesn't feel too over diversified. And I think if we, look at all of these together, it feels pretty well balanced. And one thing that I especially appreciate, with the exception of Ethereum, everything else here pays a dividend. And I know, NVIDIA's dividend yield is only 0.02%, so it hardly counts, but still it does technically pay a dividend. And going back to what I was saying about it, being well balanced, I think over the years you should get some solid share price appreciation and dividend growth just from all of these different holdings. So this seems to check all the boxes for me. Now, with that said, I know you're taking a gap year right now, but once you get into med school, I'm sure you are just going to be swamped. I'm sure you're going to be insanely busy. So I would just be mindful of your ability to keep tabs on all of these different companies. Fortunately, these are all, very solid companies, and they're not likely to just implode overnight or anything like that. But still, as a shareholder, you want to be in the loop on all of the different happenings with the companies in your portfolio. So if you ever reach a point with that where it feels like it's too much to stay on top of, then it might be worth considering going a bit heavier into ETFs, but you can always cross that bridge when you get there. It's probably too soon to tell if that's going to be an issue. Overall though, Xavier, this is a great looking portfolio. If I had to rate it out of 10, man, it would be right up there. It'd be an 8 or a 9, maybe even a 9.5. But yeah, either way, you're definitely on the right path. So keep up the good work, and thank you so much for letting me review your portfolio. Now moving on to portfolio number 3, this one belongs to my main man, Lars, who's been investing for somewhere between 1 and 5 years, and Lars has a pretty long time horizon as well. He's hoping to live off dividends in the next 2 to 3 decades, and every single month he's investing somewhere between $500 to $1,000. Now in the notes here, Lars kept it short and sweet. He said, I started off with some higher yielding stocks. He definitely did. We'll see that in just a moment. But now he's more focused on Realty Income and SCHD. And getting right into it, looking at an overview of the portfolio, Lars currently has about $74,000 invested, and so far he's up about 11%. So that's pretty solid, seeing over an $8,000 profit. Really like that. And the dividend stats, I think, are pretty cool, actually, a 5.3% yield. So overall, you're getting a decently high yield, which makes sense based on what he was saying in the notes. But based on this high yield, I don't think the dividend growth rate is that bad, 5.6%. I actually really like these dividend stats here. Now, as far as the diversification goes, in total, there are 21 different holdings in this portfolio. In total, there are 18 individual stocks with 3 ETFs, and it looks like these stocks make up about 72% of the portfolio, and then the ETFs make up the remaining 28%. Now with that, scrolling down, looking at the holdings, let's reorganize this by heaviest weighted there. So yeah, he's really been going hard into Realty Income and SCHD. These are the 2 largest positions, and combined, they make up 50% of the portfolio. In addition to these 2 holdings, I'm seeing, quite a handful of others that I really like. Blue Owl Capital Corporation, Vici Properties. I don't think Altria is terrible. I know I just sold out of it, but I do see the merit to it as an investment. But scrolling down, I see some Johnson & Johnson, some Coca-Cola, AbbVie, Pepsi, WP Carey, so there's some good companies in here. But, overall, it does look like, which makes sense based on the yield, it does look like you're really leaning into the high yielders still. Seems like there's a huge emphasis on high yielding stocks in this portfolio. Not that that's necessarily bad. Like I said, I think your overall dividend stats are pretty solid, but in going for these high yielders, there's also some others that really just are not great investments, at least in my opinion. I mean, first and foremost, we've got, MPW right over here, which has definitely had its issues. And if we jump over to Snapstock, it's cut its dividend, at least a few times over the last couple of years. So that's not great. But then with that, we have VF Corporation, and I want to like this company so much more than I do because I love my Vans. But unfortunately, VFC is a fallen dividend king. They cut their dividend dividend not once, but twice over these last couple of years, which is such a bummer. And then also in this portfolio, you have Annaly Capital Management, NLY, which to me has always been one of the most shining examples of a yield trap. We can see, looking at the dividend history, this company has a really strong tendency to reduce its dividends over time. It's just not a good place to put your money, in my opinion. And then along with those, I think there are some other questionable holdings like VOD. Zim, I'm not the greatest fan of. ETL, PNL. Overall, I can't say I'm too partial to a lot of these here. And then it looks like you also have quite a handful of really, really small positions in your portfolio. A lot that don't even make up 1% of your portfolio. We can see that there are 10 different holdings here, actually, that make up less than 1% of the portfolio. And when I see this, I tend to question whether or not these small positions are even worth holding on to. Some of them are still pretty solid companies, like, these few right here are pretty solid, but still, these are not going to move the needle very much in your portfolio, even if they see tremendous gains. So, I just question whether or not the juice is worth the squeeze with some of these. Overall though, Lars, you're still up 11%, so it's not all bad. You've got to be doing something right there. And I do think there's some good aspects to your portfolio. So overall, I think you're on the right path. Keep up the good work, and thank you so much for letting me review your portfolio. Anyway, guys, those were our 3 portfolio reviews of the day. And if you want to see inside my portfolio and see how much money I've made with dividend investing so far, then check out this next video right over here. I've been investing for about 5 years now, and in this video, I'm breaking down the total performance of my portfolio, along with all of the dividends I've received so far. So click right over here to check that out, and I'll see you in the next one.